Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate
education and information your way. We work really hard to, our focus is to have great guests on the show. As I will today introduce him in just a couple minutes. Good content and information, and the objective is to bring that to you, the consumer and the industry, on a regular basis to help you make wise decisions within anything and everything real estate. So excited about that. We'll continue to do that. A couple different ways you could communicate with us, or I should say listen to the show first, would be on your radio, KDOW, 1220 AM. You could also listen to us live online anywhere. If you go to kdow.biz, click on that live button. Listen to us live, and what we're most excited about is our podcast program. Now you do not have to listen to us between 3 and 4. You could download the podcast, follow us anywhere, and listen to us anywhere you go. If you go to the website at reradiolive.com, you could download the podcast there, or go to all your favorite spots like iTunes, Stitcher, TuneIn, Google Play, all those wonderful places. We'll be able to listen to Real Estate Radio Live, expanding throughout the globe. A lot of fun. All right, lastly, if you'd like to get a hold of us during the show, there's a couple ways to do that. One is a toll-free number, 1-800-516-1220. Also, a lot of you like the text line that's available during the show, 408-838-9060, the text if you have any questions for me or my guest during the show. All right, let me invite my guest in. He was on the show a while back, and really excited to have him back, Mr. Tom Wheelwright, CPA, author, and CEO of Provision Wealth. Tom is not only an author, but expert on tax wealth. He's a speaker. It's part of the Rich Dad Advisor Speaker Series with Robert Kiyosaki, as most of you know, and has just done a wonderful, wonderful body of work across the United States and as a guest in many locations, radio, TV, and all over the place. So we're happy to have him back. Tom, how you doing?
I'm doing great. Thanks for having me. It's always a pleasure to be on the show here.
Yeah, it's a lot of fun, and I love nothing like having experts on a regular basis. It's fun for me, and I know it's a big benefit for our listening audience. So thanks for joining us again. Maybe if you get started, Tom, tell the listeners a little bit about your background and what you're up to these days.
Oh, thanks, Joe. So my background is all very exciting. It's all tax. I started in tax 35 years ago, and I actually, my first tax job was 1980. So it's been a while, and I went to school in tax. I spent 7 years with Ernst & Young, one of the big four accounting firms, including 3 years in their national office back in Washington, D.C. So I love watching tax policy. I've had my own firm, Provision, which is an international CPA firm. We've been around for over 20 years now. So and I love real estate investors. So I love being on a real estate show, because what I want everybody to understand, all the listeners, is the single best tax shelter in the world, doesn't matter what country you're in, is real estate. So Wonderful. There's just awesome opportunities if you know how to do it. There's awesome opportunities to reduce your taxes, not just get great returns from your real estate, but reduce your taxes from real estate.
Yeah, well said. And Tom is the expert. Again, if you have any questions during the show, you could text those to 408-838-9060, or you could call the live line toll-free 800-516-1220. So let's get started. Speaking of real estate, how to borrow cash with tax-free loans. I know a lot of people may be interested in that. Can you kind of give us a summary of that?
Well, so let me kind of give an overview real quick of how the tax law works. The tax law, about 5,800 pages. Okay, I think we just added 200 pages with the most recent tax legislation, but it's about 5,800, 6,000 pages. There's one line, and it says all income is taxable unless we say it isn't. And then there's about 29 pages of charts and tables tell you how much tax to pay. And then the entire rest of the law is just a series of incentives for business owners and investors. That's all it is. Just a direction on how to reduce your taxes. So the key is to look at, okay, so that first line is important. All income is taxable unless we say it isn't. That means every dollar you bring in is taxable unless the law specifically says it isn't. Well, guess what isn't taxable? Debt. Debt's not taxable. And it makes sense, right? You have to pay it back.
Yeah.
So it makes sense that it's not taxable. But the reality is that most people don't recognize, people say, well, I'm going to sell my real estate. I'm going to have gain on the real estate. I'm going, why? Well, because I need cash. Well, why would you do a taxable sale of your real estate to get cash when you could keep the real estate, just refinance it, and pull the cash out tax-free?
Mm-hmm. Yeah, well said.
To me, it's a fairly simple concept, but I will tell you, I hear over and over again, well, I'm going to, eventually I'm going to want to sell my real estate. The other part of it is, of course, is that you could say, I don't want this real estate, I want different real estate. Well, we can do that tax-free too. That's called a 1031 or like-kind exchange, right? So we can change. Let's say we've been buying, single-family homes, and we're tired of single-family homes. We say, I want a nice big apartment complex. We can trade all those single-family homes in. In other words, we can sell them all on the market, take the money, reinvest in an apartment building, tax-free. Now, what do we do? Okay, so now we need some cash out. All right, well, so then down the road, we refinance the apartment building. We pull some cash out. We put a line of credit on the apartment building. We pull some cash out. We don't have to pay tax to get the cash or the increase in value out of our property.
Yeah. Now this is great, Tom, and we're going to go into much more detail in different things. But isn't and I know there are other ways, other vehicles, but still, to me, and maybe I'm in this business, I hear it a lot, I've studied a lot, I work with a lot of experts like yourself, but isn't it still amazing how much the average person could do with and around real estate if they just get some basic education and stay disciplined?
Oh my heavens! Here's what I keep going to. When you think about it, there's 4 different classes of assets, right? There's business, there's real estate, there's paper assets, and there's commodities like oil and gas. Sure. By far, the simplest one is real estate. I mean, we all live in real estate, right? We see it all the time. It's tangible to us. It's something that we're comfortable with. We're comfortable being around it. The more I deal with the different asset classes, I got to tell you, paper scares the daylights out of me. Okay, Business, I love. That's my first love. It's business, but it's not for the faint of heart. Okay, I mean, you don't go into business unless you're really willing to. Basically, go into business figuring you're going to lose everything once or twice during your lifetime. If you go in with that idea, you're good. Go into business. But if you can't go into business that way, the nice thing about real estate is, how are you going to lose everything in real estate? I mean, you have to be stupid to lose everything in real estate, because you go into real estate, you put insurance on it in case it burns down, right? If there's, you can do all kinds of insuring of real estate, so it's very safe from that standpoint. As long as you're smart and you learn how to cash flow and, do all the basics there, even if the market goes down, it's not like you really lose money on the real estate because you still have the cash flow coming in. So to me, I think real estate is the most fundamental of investing, and I think that most people would be wise to cut their teeth on real estate. People think they're going to cut their teeth on the stock market, but I got to tell you, between the two, real estate's way less complex.
Yeah, I would agree 100%. If you're just tuning in, again, this is Cucchiara with Real Estate Radio Live, and I have on the line for the entire hour, Mr. Tom Wheelwright has agreed to spend an entire hour with, which is great. He's a CPA, author, CEO of Provision Wealth, an expert in tax-free wealth. If you have any questions in and around tax, provisions or tax as it relates to real estate, Tom is a great resource for that, and he's done a lot of work around that. This is his life work, and he's really good at it. A couple of ways you could check in: toll free 1-800-516-1220, or you could text the live line 408-838-9060. Tom, what would you say? One of the things we see a lot here in the Bay Area, A lot of people have gained so much wealth in their homes just because of this strong economy out here, low inventory, great place to live, all the reasons most of us know that live and work here. However, I still see, and it's amazing to me, mostly the older generation, but, I don't want to categorize, but mostly the older generation are people that they're still really focused on, I'm going to pay off my house. I'm going to own a house free and clear. And I see so many people, and again, I'm not advocating people not to do that. I am advocating to look at different options. But what I see in so many times, so many cases, Tom, in my business and financing, I see people that are truly house rich and cash poor. They're sitting here with this home of worth $1 million, $2 million. Unfortunately, they may have worked for 35 or 40 years, but they have no pension, or the stock market, they took a hit, so now their retirement's way down. They're having a hard time traveling and enjoying retirement life, but yet they have this valuable resource. And again, I know there's all this is responsible. I'm not suggesting everybody run out and take all the equity in their money and go party with it. but you know what I'm getting at here, right? There's so many different ways if you sit down or if you study or you figure out how you could do some of this stuff tax benefit wise and really make your life a little easier in so many different ways.
Oh, no question. I look at that and I go, okay, let's say you've got $1 million of equity in your home. Well, you could go out with that $1 million equity. Of course, you could just, you decide, I'm going to sell my home. I'm going to move in something smaller, and I'm going to go, travel, and I'll live off the $1 million. $1 million won't go very far. Okay, if you're living off of it, I'm sorry, but it's just not going to go that far. You're going to outlive your money if you do that. The great thing about real estate is that two things. The two things that I think are the magic of real estate are debt and taxes. Those are the two things that are magic about real estate. So I'm not I appreciate Dave Ramsey and his idea that you pay cash. I just think it's a poor man's way of investing. Okay? Because debt is you're using somebody else's money, and here's what happens with debt. You not only get the return, so let's say you're getting an 8% return. If you're paying a 5% mortgage, let's make it easy, a 4% mortgage, you've made twice as much money off the bank's money. It's not even your money, and you're making money off somebody else's money. I mean, to me, you think about how Wall Street makes money. That's how they make money. They're making money off somebody else's money, and they don't get 4%. They get a fraction of 1%, and they're happy. No, because it's somebody else's money, right? Said. Because it's free. So instead, now you got real estate. But here's the magic. Not only do you increase your rate of return. So a typical rate of return, if you're making 8 to 10% on your real estate, if you pay cash, you should make 30 to 40% if you borrow. Okay, so it increases your rate of return. But here's the cool thing. From my standpoint, of course, I'm a tax nerd, right? So I think tax is cool. So the cool thing to me is you also get the tax benefits from the bank's money. So if you take that $1 million, for example, and you buy a $4 million Walgreens, for example, which would be a really simple thing to do, right? You go buy a Walgreens because they do all their sale and lease back, and it's, 30-year lease, great tenant. So you go buy a Walgreens for $4 million. You get this tax benefit that a lot of people, it's sometimes hard to understand, called depreciation, which means that you get to write off a portion of your investment every year. Okay? And for anywhere from 5 to 40 years, you get to write off this portion of your investment. Well, here's the thing. If you are borrowing money to buy that investment, not only do you get to write off the portion of the building that you paid for, but you get to write off the portion of the building the bank paid for. So if you put $1 million into that Walgreens and the bank put $3 million in, your tax deduction isn't based on your $1 million. Your tax deduction is based on $4 million. So you've quadrupled your tax benefit. And that's why when I always tell people in my book, Tax-Free Wealth, I spend a whole chapter on this. Chapter 7 of Tax-Free Wealth is on the magic of depreciation, because what happens is you can now have cash flow that's increased. You've increased your cash flow because you borrowed, but you've also eliminated your taxes because you borrowed. And
we're gonna have to hang on right there, Tom, because we're gonna have to take a quick break. But I want to keep this going, keep the energy going. If you have any questions, 1-800-516-1220, text 408. 838-9060. This is 𝗘𝗀𝗓𝗏. I'll be back. Today, we're joined on the line here with Tom Wheelwright. He is a CPA, author, CEO of Provision Wealth. Tom is an expert in tax-free wealth, has published books, been on many guest appearances on many different shows, radio, TV, and the like, and continues to do a lot of great work. And the focus today, the conversation is really about, some tax benefits, some education on tax. What's what we do here on Real Estate Radio Live is we like to have experts on like Tom to really educate and inform you what the best practices are with your real estate. And Tom's doing a great job of that on this session as well. So again, real quickly, if you have any questions for Tom, anything real estate related, tax related, 1-800-516-1220, or you could use the text line 408-838-9060. Tom, you talked a little bit about, I'm not sure if you want to elaborate a little bit more, but how to use some of the like-kind exchanges. I know you touched on it a little bit. Any more on that, or did a pretty good job, I think, covering now?
I think it's something, thanks, Joe. I think it's something that people are a little bit afraid of it. And let me tell you why I think people are afraid of it. I think it's because their accountants are afraid of it. This is, people say, well, eventually I'm going to have to pay the tax. And I'm going, well, A, no, you don't eventually have to pay the tax if you do it right. And B, so what? Okay? Mm-hmm. I mean, by the way, these are the same advisors that are telling you to max out your 401k. You're going to have to pay that money back later, and you're going to have to pay it at a higher tax bracket. At least with real estate, when you pay it back, it's going to be at a lower tax bracket because it's going to be capital gains. And you're going, oh, well, yes, but, I'm just going to have to pay it later. Well, there is the ultimate tax planning strategy for real estate is you do your like-kind exchanges, you own real estate, you've depreciated, you've gotten all your tax benefits, there would be a huge gain if you sold it, but you don't. Instead, what eventually happens to all of us is we die. Mm-hmm. And the magic of death is that it wipes out your tax liability on your real estate. So your kids don't have a tax liability. You didn't have a tax liability. You borrowed the money out while you were doing it. You used debt in order to finance your activities. You didn't go out and sell it and have to pay this big tax on the gains. Instead, guess what? When you die, you basically, all that tax on that gain, it all goes away the day you die. So it can be permanent. I mean, we're all going to die sometime, so we might as well die and get tax benefits from it, right?
Yeah, no, absolutely. Well said for sure. What is the, Matt, I mean, there's so many different, would you recommend, I mean, you're an expert on tax, of course. Where do you fall in terms of recommendations with, financial planning? Someone, isn't there a difference? Maybe you could talk to the audience a little bit, Tom, in terms of, you have a financial planner that may be helping you with your finances, which is fine, retirement, et cetera, et cetera. Some of them also have some tax background. How do you, or what would you suggest to the people to marry those together? Because what I see a lot sometimes is, sometimes the focus is on the financial planning and the wealth creating, and in some cases, they're not big fans, financial planners. I'm not saying all of them, but aren't huge fans in real estate sometimes.
People are fans of how they get of something they get paid for. It's like they always say in the FBI, right? Follow the money. Okay, so if you're wondering what's going on, follow the money. And the same thing is true with your advisors. Follow the money. So if somebody gets paid when they buy your portfolio of stocks, they're not going to tell you to buy real estate. That would be ridiculous. They're not going to get paid for it. On the other hand, you might have a real estate broker. They're going to tell you should be doing real estate. Don't put your money into stocks because they get paid when you do a real estate transaction, right?
Yeah, right.
So what I like to see is I really like to see advisors who get paid for what they do for you. And the challenge I have with financial planners is they get paid whether they are successful or not. And I don't like that idea. In fact, it's illegal This is shocking.
Yeah.
It's always been shocking to me. It's illegal for a financial planner to get paid based on their results. It's illegal.
Well, let's hold that thought. When we come back, we're going to continue. We're going to take another quick break. If you have any questions for Tom, 1-800-516-1220. Text. Joe Cucchiara with Real Estate Radio Live. We are joined on the phone for the entire hour by Mr. Tom Wheelwright. He's a CPA, author and CEO of Provision Wealth, tax expert, talking about taxes, benefits in and around real estate, and all the many benefits for sure. And before we get back to Tom, I just want to get a little message out here on a regular basis. We have thousands of listeners that call in and to work with real estate agents, and many people that we help out getting some message and word out. And I know rentals are a tight commodity out there in the marketplace. So I want to pass along that there is a rental available in Willow Glen. We wanted to pass on by one of our realtors. It's a 3-bedroom, 2-bath, walk to town, great stores, Books and Elementary, which is an outstanding school. So if anybody's out there looking for a rental in the Willow Glen area, check in and give us a call. And you can always go to the website or text 408-838-9060. We like to help the community and help our real estate community and industry as well. All right, Tom, kind of back on terms of the estate planning piece. What is your... I guess what I wanted to find out is there's a lot of people that call the show and say, Joe, I'm really interested in investing in real estate. I have some extra cash. I'm a little concerned around the Bay Area because it's so expensive. There's not really a cash flow situation. I'd have to put so much down. I'm looking at different states. What would your advice be to someone that's just getting into the investment, arena of real estate? They're real excited. They want to learn. We want to encourage them to learn and, grow. What types of things would you recommend if a person, you were talking to them today, sitting in front of them, and they said, what are the steps I should take, Tom, in looking into and investing in real estate?
Well, the first thing I'd say is practice. I mean, when people learn how to trade stocks and options, they do paper trading. And I think that people forget that you can do that in real estate too. So you could go through and you could do some mock acquisitions. You could look, you've got to look at properties. You've really got to get your hands dirty, right? And I think really get to understand how real estate works, because it really is easy to get burned. I think the other thing is, I think going outside of what is, I think it's dicey, frankly. I think that, people say, well, where's the best market? Well, I think there's always a good deal in your market. You just have to find it. Now, it's not easy. There are some markets that good deals are easy to find. Okay, and if you're looking for easy and you don't mind something 2,000 miles away, okay, but I think that's pretty risky. Whereas, I look at real estate in the Bay. I find real estate in the Bay Area to be fascinating because my son lives in the Bay Area. And what you guys have learned in the Bay Area is that the smaller the unit, the better the cash flow. So, all these houses, right? I mean, you guys this is normal for you. You don't rent a house, you rent a room in a house, right? And that's typical. My son lives in a room in a house, and so that's typical. Well, you break it up, the smaller the pieces you can break it up into, the better the cash flow. Well, so you have to be, I think you have to be a little creative with that. But I think the other thing is I do believe very strongly that you have a plan of action or a strategy. We call it a wealth strategy. That's where our name comes from, Provision Wealth, because we do a wealth strategy. And a wealth strategy means we want to be really specific about what type of real estate you're going to be investing in, what are your criteria for investing. You don't think, well, I'm going to invest in single-family homes in Indianapolis, and I'm going to invest in apartment buildings in Tucson, Arizona, and I'm going to invest in a commercial property in Palo Alto. Why would you do that? Nobody who ever made a lot of money did it that way. Donald Trump, one of our richest people in the world, he's very specific on what he invests in. He doesn't invest in all sorts of different types of real estate. He invests in Class A commercial real estate. That's what he does. So I think we can learn a lesson from those who are successful and say, well, let's stay really focused.
Yeah, well said. We're gonna take another break in a minute. We're gonna come back for our last segment. But before I do that, I want to remind, where is the best place for people to reach you if they want more information about what you do? Tom, is there a website, phone number? What's the best place for them to find out more about what you do?
Absolutely, 𝗥𝗲𝗋𝗚𝗏�advisor.com. That's the book. It's been a bestseller on Amazon bestseller for 2 years. 𝗥𝗲𝗋𝗚𝗏�advisor.com. And, or you can call our office, 866-467-5809, 866-467-5809. And we're happy to talk to any of your listeners anytime.
Very good, very good. Children, we're going to take a break here in a minute or so, but yeah, one of the things you talked a little bit about, how children can improve the tax benefits from real estate. Let's maybe we can get a quick start, but then we're going to take a break in a minute or so, and we can finish up on the other side.
Well, I think what a lot of people get caught up in, so let's be real quick here. A lot of people get caught up is that, well, I'm not going to get tax benefits from real estate because I'm not a real estate professional, and so I'm going to be limited to this idea of passive losses. Okay? Mm-hmm. So that's where children come in. Okay? Because what happens is we have a disconnect between your business. So a lot of real estate investors are also business owners. So in a business, you're active. In real estate, you're passive because by definition, you're passive unless that's all you do. So now we get passive losses can't offset the income from our business because if we do it right, we're going to have tax losses. We're going to have positive cash flow, negative taxable income from our real estate. We need to be able to offset our business income from our business, and that's where your children come in. So that's what we can talk about briefly in the next segment is, okay, how do I take my children to be able to take advantage of those passive losses? We're not going to convert them. They're going to still be passive, but we're going to use them every single time.
Yeah. And someone like me might say, it's about time I could use my children for some benefits. God, I mean, they've cost me a lot of money over the years.
Exactly. They used to be assets when we had farms, right? They used to be assets.
Okay, I just want to make a full disclosure here. I'm teasing. I love my children, and they're worth every penny I've spent, believe me. All right, we're going to take a break. We're going to come back. We're going to finish up. If you have any more questions for Tom on tax, again, a couple different ways you could reach us, 1-800-516-1220, or you could text the live line at 408-838-9060. And lastly, if you need a rental in Willow Glen, we got a great one for you. Give us a call.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and 𝗘𝗀W.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you again for joining us this afternoon. As we wind down the show here, we're just about out of time, and time always goes quickly when you have great guests like Tom Wheelwright, CPA, author, and CEO of Provision Wealth. Tom's been kind enough to spend the entire hour with us as we wind things down. Real quickly, if you have any comments, looks like we got a couple of texts, and I'll send them over or try to get to them before we get off the line. 1-800-516-1220 or text 408-838-9060. Maybe you can just kind of summarize for us, Tom, before we have to head out, kind of your thoughts overall in terms of people really leveraging and taking advantage of taxes out there and using real estate as possibly that primary vehicle.
Well, I think that if real estate is, first of all, I think you have to decide, yes, I want to invest in real estate. And if that's what you want to invest in, then you have to decide how you're going to invest in real estate. Are you going to use debt? Are you going to use leverage, or are you going to pay cash for it? And then what you have to do is, once you do that, sit down with the tax advisor who asks the good questions. You made a point earlier in the show, Joe, about your advisor wasn't asking you good questions. A good advisor will always ask lots of questions, and they will ask them frequently, and they'll be in touch with you on a regular basis and asking you, okay, what's going on here? What's going on there? What's next here? And so when they ask those questions, then what we can do is we can decide, okay, how do we get the maximum tax benefits out of a real estate? It may mean, like we were talking about in the last segment, it may mean that your children need to own part of your real estate and part of your business. That way you take advantage of your passive losses because the income from your business now is passive to your children. So we're looking at how to not just maximize the investment, but how to maximize our tax benefits from our real estate.
Okay. Well said. And that was before we go too, I want to just add, I mean, Tom has given us a lot of good advice, but as most of you know, all the experts that I have in different aspects of real estate on a regular basis, I always remind everyone to do kind of summarize what Tom says. Whatever area it is, if it's tax, if it's financial planning, if it's stock market, find an expert, find someone you trust. The best way to do that is by referral or someone that has results or had great experiences with them. This show, again, is to help you focus on education and information, give you the tools, not necessarily to make you an expert, but give you the tools to find the right person, whether it's Tom or someone else that could help you in these different areas of real estate. That was really my goal and objective for the show, and I want to continue to do that. So with that, Tom, I want to thank you for the time. It's always very valuable. And once again, real quickly before we go, where do people reach you if you want more information?
So, first of all, go buy the book, right, on Amazon or on Audible. It's Tax-Free Wealth is the name of the book, and the website is taxfreewealthadvisor.com, taxfreewealthadvisor.com, or you can always call our office at 866-467-5809, 866-467-5809. Love your show, Joe. Absolutely love the education and the experts that you bring on your show, and I love being part of it. So thank you so much.
Yeah, I appreciate it. Before we let you go real quickly too, what would you in that book, I just want to make sure, well, does it cover, I'm sure it covers real estate, a lot of different aspects in and out. I know you've worked with Robert Kiyosaki. So my guess is this book is going to be loaded with a lot of good, fun, easy to understand stuff for the general consumer, right?
Well, you know, my goal in life is to make taxes fun, easy, and understandable, and that's the goal of the book. That's actually, fortunately, that's the comments we get back on the book, is that it's really easy to understand, it's interesting, it's written for the average person. There's no tax lingo in it, and we really gave when I wrote it, I wanted everybody to know everything that they needed to know. So we didn't hold anything back. So, when you want to learn about real estate and the tax advantages of real estate, or how the tax law works, how to get tax deductions for your home, for your car, for when you go out to dinner, when you take a trip to Hawaii or wherever you want to go, then you can find it in that book.
Very good. All right, Tom, thanks again. I really appreciate the time, and I'm sure we'll have you back. Wish you the best in 2016, and all the best, my friend.
Thanks very much. Thanks for having me.
All right, we're going to have to duck out here. Thanks again for tuning in today. This is Joe Cucchiara with Real Estate Ready to Live. Remember, you could download the podcast at 𝗪radiolive.com, and don't miss the mixers are back into the mix here, February 2nd. More information, go to RE Radio Live. Have a great afternoon. We'll be back with you tomorrow.
You've been listening to Real Estate Radio Live. For more information on today's program, visit 𝗪radiolive.com. That's